Are you guys used to Zoom? For sure. Yeah, that's good. I've been doing virtual meetings for the past 4 years now. My firm is actually now pretty much 100% virtual. Yeah, got to. You know, it's and we'll talk about some COVID-19 stuff in here too. Let's see. Let's go. All right. So yeah, for those that are joining, we'll be getting started in just about 3 minutes or so. We'll get started at 6:05. Let's see. Make sure this is good. Got that. Yeah, I think James should be joining us tonight too. I think he's should be on it very soon. He's at what happened? Yeah, sorry, no problem. Yeah, so just some housekeeping. If you guys aren't speaking or contributing, we do ask that you put your mics on mute. You can unmute yourself at any time for any questions or anything. There's two ways to ask a question. You can post your question in the chat box in the Zoom app, or you can pretty much just unmute yourself. So we'll be getting started very, very shortly. One second. Okay. All right. So yeah, let's just go ahead and get started. You know, looks like we got quite a few folks. So I'm gonna go ahead and get started with the recording. Thank you guys for being a part of this session tonight. I know we're going through a very strange time with COVID-19 and everything like that. Today we'll be talking about budgeting, but we'll also be, basically just talking about how COVID-19 has impacted our business, things that we can do now in this type of environment, and how we can actually avoid something like this happening again. How do we position ourselves to avoid something like this happening again in the future? So with that being said, let me actually go ahead and start sharing the presentation really quick. 1 second. And then just for those that just joined, there are two ways. You can ask a question at any time you want, or you can contribute. And two ways to ask a question is simply by typing in a chat box, or by unmuting yourself and asking a question. We will leave a few minutes at the end for Q&A, and today we'll probably cut it short. We'll probably end at about 7 o'clock or so, depending on how many questions or anything that are being asked. So we will end early today, especially since we're in a more virtual environment. I usually don't like to go too long with the presentations, especially for the ones that are virtual. We do ask that if you're not speaking, that you do mute yourself so that you don't distract the folks that are on the call today. So today we basically will be talking about budgeting. So how do you budget for your business, and then also just covering some topics related to the COVID-19. The timeliness of the topic, we do believe, is very important that we cover those items. For example, getting funding for your business, Next week, we will actually have a specific segment on how to get business funding. But since the COVID-19 is here, it's important that I lay some information out very, very early. So the title of our topic today is Costing It Out. For those that don't recall, my name is Jeff Badu. I'm a licensed certified public accountant, founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. Our agenda today, we'll just talk about the understanding the cost of key activities as well as resources. So certain things that you need to invest in as a business owner. What I consider key activity is something you need to invest in order to effectively grow your business. I don't consider it a cost, I consider it an investment. So that's one way to sort of get an outlook of how everything works. Then we'll be talking about budgeting. So we'll go through an introduction of what is budgeting, certain components of the budget, and then we will actually go ahead and develop a budget. And what you don't see on the slides, we'll also talk about some COVID-19 updates, topics as it relates to finances. And then you guys can ask any questions at any time you want throughout this presentation. So understanding the cost of key activities and resources. Now, I said it last time, but business owners must be able to track the money. What happens when you can't keep track of the money is that you don't have a business. What happens when you don't have a business is you have a hobby. All right, so if you want to avoid being somebody who runs a hobby as opposed to a business, you need to make sure you're keeping track of the money. You got to follow the money, essentially. And part of the money is you need to understand the cost of doing certain business. We call it the cost of key activities as well as resources. Remember, cost of key activities to me are, instead of even the word expenses, I would say investments that help you grow your business. For example, marketing is a big key activity because the more money you pour into marketing, the more clientele you'll be able to get, as long as you're doing the right type of marketing. As long as you're pouring the money into the right type of marketing channels. That's where you bring in a marketing expert. Remember, last time we chatted, I mentioned there are 3 key people you need to have on your team. The first one is your attorney, who helps you set up your company. The second one is your accountant, who helps you keep track of the money. The third one is your marketing expert, the one who markets your business in order to help you get clients and overall advertise your business. So overall, marketing is a very, very key activity as it relates to your business. And on my profit and loss, if you were to take a look at it, marketing is definitely in the top 3 of expenses as far as costs. We market on various platforms such as Yelp, Facebook, LinkedIn, and Google. So those are 4 ways. And then on top of that, we also do word of mouth. So this presentation, for example, is being live streamed. It's being recorded. So this is how I get clients. Essentially, we ultimately get clients by marketing our business, by putting ourselves out there, by pouring money into these various resources. Supplies is the same thing. So if you are a business, you need supplies. For me, I need a stapler. I need paper. I mean, nowadays, we're in a virtual environment. My firm is right now 100% virtual. We don't ever need to face-to-face meet with a client. We don't even need to print a document out. That's how virtual we've become, and that's how paperless we've become. Everything is all through a secure portal that we have in the firm. Clients submit documents there. Everything is all communicated via email, phone call, or Zoom like this. So we never, ever need to face-to-face meet with the client. That's one of my COVID-19 updates, is that COVID-19 should teach us that our business needs to be virtual in some capacity. If you can't go 100%, I challenge you to do so, because it's like, why not? If you can do things in such an efficient manner, such in a way you don't have to travel anywhere, you don't have to, you don't have to do a lot of these things. You can do business in a collaborative environment where you're doing it through Zoom, Trello, and all these other platforms. Technology is so infinite at our fingertips that for me, I was like, you know what? My business plan was formed 10 years ago. So in 2010 was when I actually developed the business plan for Badu Tax Services, which is our #1 company right now. And I said, you know what? I read the business report. last time we chatted, we talked about making sure you're paying attention to the industry report, IBIS World. And once again, if you guys need a report, feel free to shoot me an email at jb@baidutaxservices.com, and I'll be able to send you the report for free. It typically costs about $1,000 to $2,000 to get a report, but I can send you what you need for free. So I researched the tax preparation industry, and it told me that the industry was going virtual. That shops like H&R Block, Jackson Hewitt would soon eventually not be 100% out of business, but they will lose market share because they have a large brick and mortar presence. And right now the consumers aren't really looking for brick and mortar. They're looking for more convenient ways to file. And unfortunately, a lot of CPAs are also passing away, and they have offices and all these brick and mortar things. So you got to pay attention to the report. If the report is telling you a certain trend, you need to have your business model go that way, right? It can apply to a lot of industries where technology is dominating the things we do. Retail, for example. A lot of people nowadays shop online. They don't like brick and mortar. If Amazon hasn't taught you anything, they should have taught you that your retail shop needs to go online, right? They've put Sears out of business, Sports Authority. I mean, you name it, they've put them out of business. And they're starting to acquire and getting into the grocery store market. So overall, we need to make sure that we're adapting our business plans and our business environment to our current environment, right? So, and I always like to put it, stop being stuck in such old ways, basically, where everything needs to be brick and mortar, everything needs to be by paper. We need to learn how to do things more efficiently, and COVID-19 is now forcing us. It's no longer an option that we have to do things more conveniently, but it's forcing us because we don't want to catch the COVID. We don't want to expose ourselves by meeting with everyone. You never know where everybody's been. We haven't physically met with a client in over 2 months now, right? And we're thinking to ourselves, here's what a lot of companies are also thinking. They're like, well, wait a second. If we can do this now, why can't we do this in the future too? Why do we need COVID-19 to tell us that we should be going virtual? Why do we need to pay $500 a month for an office when the staff can work remotely and they can be more productive? It doesn't make any sense. And companies were already shifting to this environment anyway. That's where companies like WeWork comes in, where they provide office space and they provide virtual environments. Company like Zoom, stock price went up tremendously when this COVID-19 hit. So overall, these key activities, we also need to adapt to the environment that we're in right now. So, and I understand not everybody can go virtual, but I guarantee you some part of your business plan can be virtual. Some part of it, whether you're doing consultations with people, whether you're hosting a workshop. The workshop doesn't need to be in person anymore. Not even networking events, they don't even need to be in person anymore. You can still have a network and even a happy hour, for crying out loud. Or a day party, virtually. Can you imagine? A day party virtually. It doesn't sound like the sexiest thing in the world, or it doesn't sound like the most normal thing, but understand that the world is moving away from the new norm. The new norm is basically doing things more efficiently, right? And I personally knew this 10 years ago, that the world would be going virtual. We didn't need COVID-19 to tell us. Amazon has told us this already. Apple told us this a long time ago. Zoom came out a long time ago. Google Hangouts came out a long time ago. So we really have to get ahead of the curve, and that's why it's so important to read the business plans. The business plans will tell you these things. If you read it, 5-page report, IBIS World report, read it from head to toe, take some notes on it. It will tell you exactly what you need to know about your industry. And my IBIS reports that I send you, it gives you a 5-year outlook on what's going to happen in an industry. And make sure you're reading the report every single year, just in case something changes. What happened to Blockbuster? They were stuck in their ways, and they didn't adapt to the new industry. So they went out of business. You know, what happened to BlackBerry? Same thing happened to them. But for them, they eventually stopped being so stubborn and decided to come out with touchscreen phones. And they have one of the highest securities, and they're like, you know, let's combine these two things together. Let's stop being stuck in our old ways, but let's bring back something that we dominate in, which is security, and let's actually turn this company around. Time and time again, a lot of companies are going bankrupt because they cannot adapt. So what's happening today? We're seeing the same thing. What's going to happen 10 years from now when you have more AI, when you have drones, when you have driverless vehicles where the Uber business won't be existent as far as drivers being able to drive, right? 10 years from now, you won't see Uber drivers being able to drive because the cars will drive themselves. How do I know this? I read the reports. I see it. It's in the reports themselves. And they've already come out. In Vegas, for example, they have autonomous vehicles already that drive themselves. So if they're doing it today, what makes you think 10 years from now they can't do it on a large scale? You know, same thing with your cell phones. Back in the day, 10 years ago or 15 years ago, your phones were, you know, they weren't touchscreen. But what happened when Apple came? They said, forget it. We're getting rid of all touchscreen. We're getting rid of all flip phones, all those keypad phones. And we're doing nothing but touchscreen. And now the new norm is touchscreen. They've even done the same thing with your own watch that's on your wrist. They're like, you know what? Screw this. You know, some people still wear Rolex and all that. But even companies like Rolex are being forced to adapt to the new environment, the new norm of touchscreen watches. And the same thing goes, it doesn't just go for Apple or Disney or Microsoft or BlackBerry. The same thing goes for your business today. You know, so COVID-19 is really teaching us that we need to adapt. We need to be an adaptive. We need to get ahead of the curve. How do we get ahead of the curve is we read the reports, right? We do our research. We see what's going on. We look at the trends. We look at what's going on in the industry. Because if you're being stuck in your ways in brick and mortar, in person, 10 years ago, I mean, even 2 years from now, matter of fact, maybe 3 months from now, your business might not be in business anymore. Because who knows when this COVID thing is going to end anyway? Nobody does. We can make predictions and we can do all the things we want, but nobody truly knows. So overall, we need to incorporate these things in the cost of our key activities. Other key activities for my firm, software. Software is a big one. I need tax software. I need Zoom. I need all these things in order to get the work done. So that's a key activity for me. Employees. We don't have any employees, but we have independent contractors. We have 30 independent contractors in the tax firm, and we have 100 across the Badu Enterprises brand. So these are key folks. Right? These are key people that help us grow our business and grow our revenue. My true definition of a key activity is something that increases your top line, your revenue. So what I do every 3 months, I go into my budget and I say, hey, I look at every single expense. Is this something that is helping me increase my revenue? Yes or no? If the answer is yes, then I stick with it. As a matter of fact, I ask myself, should I even be increasing this expense because it's generating me more revenue? Now, if I look at an expense and I say no, one was cable. I was like, why do I have cable when I don't watch TV anymore? So for me, cable was not an expense that I needed. So I got rid of it. It didn't make any sense for me to have cable, basically. Let's talk about it from more in the business environment. Office space. We used to have a big corporate office, right? We used to have an office. We used to pay rent. But then we were like, you know what? Nobody was even coming there. Like, it's nice to have an office. It's nice to look professional. And we still have some clients that are like, oh, yeah, you don't have a big office, so we're not coming anymore. I'm like, cool. That's not, you know, you got to make sure you're working with the right type of client, too. You can't work with everybody. You can't please everyone. You got to work with your target demographic, your target audience. And that's why we target business owners because they're flexible, and we target millennials, specifically millennials that are in the real estate game. Right, so ultimately, you need to make sure that you're adapting to the business model or you're adapting to what's going on in your industry. You're getting ahead of the curve, right? You're not being behind the curve, but ahead of the curve, way advanced. How do you do that? Is you read the industry report, you update your business plan on a frequent basis, and that's how you get there. The goal is to turn these costs into true dollars, revenue, marketing. A few years ago, we used to spend about $500 a month on Yelp advertising. And it led to about 50 new clients. Let's just say, it led to about 50 new clients every single month, right? So let's just do the math really quick. Let me just do the math 1 second. Let me get my calculator out. So, and we charged, back then, we used to charge the average client about $150, let's just say. So $150 times 50 new clients, let me do the math on that one. 150 times 50 is $7,500. If we're spending $500 a month on Yelp, then our ROI, return on investment, $7,000 divided by 500 equals 14 times 100 equals 1,400%, 1,400%. For every dollar we spend on Yelp, for every single dollar we spend on Yelp, right? That means that it's generating 1,400%, $14 basically. Every dollar translates into $14. So what does that mean? I need to be spending more money on Yelp, right? So that's what it means. Anytime you have an activity that you're investing in is generating you return on investment or ROI, you need to be putting more money. Now, you do have to be careful, though, into not pouring too much money, because the following year, we thought it was so good that we poured in $10,000 a month. Now, it did lead to about 150 new clients, which is still return on investment, but our return started to diminish. Why? Because Yelp has certain metrics that essentially you can be seen organically as long as your page is optimized the correct way. I'm not a marketing expert, but I did learn a thing or two about Yelp. So what we did was we invested in a Yelp consultant. We said, hey, we're spending $10,000 a month on Yelp. It's generating us results, but man, I think we could cut down on this. So what happened? The individual said, here are the things that you're doing right, here are the things you're doing wrong. For, what was it, $167 a month, and I still pay this lady to this day. $167 a month, key activity. I'm going to optimize your page for you. I'm going to put in keywords so that when somebody searches for you on Yelp, using keywords that are known in your industry, they can help you find you faster. I'm like, sign me up. Anything that can help me cut costs but still generate revenue, I'm down for it. So what happened was that we cut the advertising from 10,000 to 5,000 the following month, and we saw about 100 new clients a month, which was cool, which was awesome, right? But we were like, why is it going down? She said, yeah, it takes time naturally for Yelp to get used to certain metrics. Long story short, today we spend $2,500 a month on Yelp, and we still get 150 to 200 new clients every month. What happened? We cut our costs down by $7,500 a month, but we paid this person $167. So we traded $167 to save $7,500. That was the difference, and we still got the same results. So you do need to optimize your plan or your page or your costs a little bit too. So you don't just because you're spending money doesn't mean you make more money. There are smarter ways to make more money. Perhaps investing in a consultant, investing in somebody who knows how to do something better than you can. So that is my advice when it comes to that. It is something that can truly help us get to the next level. What you can do too is you can incorporate your costs into your pricing. So a perfect example is somebody in a retail space or manufacturing space. If you sell t-shirts for $5 a shirt and it costs you $2 to manufacture it, then yeah, you need to make sure that your $2 is factored into the price. So basically, or to come up with your price, you can say, okay, it cost me $2 to manufacture the shirts. It costs us about $1 to advertise. And then maybe another $1 to do other things. So $5, and then we're gonna sell them, or we have, let's just say we have $4 so far as a cost, and our profit margin we want on each t-shirt is 60%. So then what you do, you sell the t-shirt for $10. So you back into the revenue or your price using your costs essentially. So just to reiterate that example, let's say you're selling. It costs you $2 to manufacture a shirt. It costs you $1 for advertising, $1 for other miscellaneous items such as rent and all that good stuff. And your profit margin in your industry, based off the IBISWorld report you read, said it's 60%. Then you can back into the revenue by simply doing, basically you're doing $10 minus 4, which equals 6, essentially 60%. Profit margin equals the profit you make on a property, or I'm sorry, not a property, the profit you make on a specific item or revenue stream divided by the essentially the cost of making that item is your profit margin. Return on investment is the flip, right? Oh, I'm sorry, profit margin is essentially for every dollar of something you sell, how much profit am I making? So it's profit divided by revenue, right? So that's ultimately how you get that calculation. Return on investment, this is something big for real estate investors. I'm a real estate investor myself. So we look at ROI heavily. Return on investment, I just explained in the Yelp example, is for every dollar I put into something, how much am I going to make from that? Or in other words, how quickly can I double my money? So 100% return on investment means that you doubled your money. So in our Yelp example, let me just go through the example again, and that the cost, let me make sure, get this calculator working. So essentially, here's what happened, and that we got 50 new clients every month from investing in Yelp. Our average cost at the time was $150 per client, which is $7,500. So that is our revenue, right? Then we subtract out our cost, which is 500, which is 7,000 divided by 500 equals 14. So for every dollar we make, for every dollar we invest, we make 14. So our ROI is 1,400% essentially. It's a big number that a lot of investors usually track. And for me, I try to eliminate costs that don't generate ROI. So remember with the example about cable. Cable wasn't generating me ROI, right? But advertising was, and training and education and coaching definitely was. I pay a lot of money for my business coach every single month, but the amount of money he generates for me is, I mean, it's priceless basically. You know, so, and in that example of the Yelp thing too, is not just $7,500 in revenue, we provide about 10 other services. So of course, this client, at least one of those clients will need some additional services. Whether we do a financial coaching, a tax plan, you know, where we can charge anywhere from $250 to $1,000 for that client, we're boosting that ROI to now infinite. So our return on investment on Yelp is truly infinite. And then always try to leverage resources in order to minimize costs in certain areas. Meaning that if you have an employee that's good at marketing, which is what I do now, I have my assistant is in the Philippines. She's an independent contractor. She's very good at marketing. So we combine those two cost functions into one, where she does the marketing and then she also does the traditional assistant type stuff. So with that being said, let's just pause here really quick. Let's see if we have any questions or anything. I mean, you guys can ask any questions you want before we get into the next slide. And any questions in the chat box we will go through at the end, just to avoid any distractions or anything. Yeah, the chat questions we'll get to at the end, if you don't mind. Cool. All right, so now let's talk about budgeting. Budgeting, I'll give you a personal story. Budgeting was what truly changed, like helped improve my business tremendously. Because the challenge was, you know, we were making money, but we were spending money in places that didn't need to be spent, or we couldn't project the cash flow. Budgeting is a great tool to help see where your cash flow is. It's a great cash flow management tool. So for me, budgeting really helped me predict the cash flow, right? Whether we were going to make $5,000 this month or $100,000 this month, budgeting was truly what helped me predict cash flow. So a budget should be created at the beginning of each year. Basically, and if you're a new business, it is tough. But basically what you can do, we'll go through a budget example in a second, is you would come up with your costs, right? You would come up with the price that you're going to charge a customer, and then you would come up with your target client base or target amount of clients. So when I started my business in 2016, the business plan said that we wanted 1,000 clients that we're paying $150 per client, or per person. So that would be $150,000 in revenue. So in our budget at the top in the revenue section, we put $150,000. And then expenses, it costs about $5,000 to start the Badu Tax Services. And then there are other things. That was the mistake. See the mistake that I made. Learn from somebody else's mistakes. I didn't budget for advertising. I didn't budget for independent contractors. I didn't budget for any of that. I was just getting started. And I'm so glad you guys are in this cohort program, because you get to learn these things in advance, so you don't make the mistakes that I made when I was starting my business. Right? So when it comes to budgeting, we lay it all out. It's not the time to get shy or nervous. It's the time to be fully transparent with yourself and say, these are the things that I'll spend. If you know you spend $1,000 per month on rent, $12,000 should be in your annual budget. If you know that you plan to, in your industry, that for every dollar you generate, 10% of it needs to go to advertising, then allocate 10% to advertising. Real simple. Remember, look at the report. So if you know your revenue, just look at your IBIS World report and see what each cost function should be. And it could be in thousands of dollars, so it doesn't have to be exact. If you don't know it, look at the report. You need to know your target revenue. That's a very important number. Of course, you might not hit it, or you might exceed it, but that's not the point. The point is you set the budget, and you'll get better in year 2 and year 3. It'll be tough in year 1. Year 2, it'll still be tough. Year 3, it'll be like clockwork, because you know when to predict certain things. You should have 2 budgets. An annual budget, which basically is what we just talked about, where it's 12 months out the year, and then a monthly budget, which is simply the yearly budget divided by 12, adjusted for any seasonal fluctuations. Prime example, tax season, which is no longer the case anymore, but tax season is usually when our most revenue comes in. This happened about, ever since we launched the firm in 2016. So tax season was when our revenue was tend to be higher. Right? So in our budget, we wouldn't have a 12-month budget where all the revenues are the same every month. We should adjust for cyclical effects or seasonality. Now I'm proud to say we have predictable revenue models that allow us to be profitable or generate revenue every single month consistently, because we figured out how to incorporate different services into our platform that we have. So you should adjust your monthly budget based off cyclical effects, cyclical changes, and things of that nature. Now, budget will help you keep on track. So remember this annual budget, revisit it. I revisit my annual budget at least on a weekly basis, actually, just to see if anything has changed. Maybe a bill that I got rid of, right? I mean, I'm not a big fan of cutting costs or cutting expenses, but if an expense doesn't generate you revenue, or if you don't need it anymore, then what's the point of having it? If you can refinance your car into a lower interest rate, then why not refinance your car into a lower interest rate to lower your payments? When it comes to money, it's a game that you really have to know how to play. My goal, though, when it comes to a budget, I'm multiplying my income streams as much as I can. In today's society, COVID-19 has taught us you cannot rely on one income stream. What happens when your barbershop shuts down? You're done. Now you got to rely on loans. Now you got to rely on family support. But if you have a barbershop and a rental property, or maybe 2 of them, and a month where you're down, your rental property can sustain you, and your barbershop can still, basically stay closed. Or maybe you do some virtual. Remember, in our business models today, we need to find ways to adapt. Perhaps we do a virtual barbershop or a mobile barbershop where we go to other people's places to cut their hair. That's what my barber is doing personally. So overall, we have to make sure that we're adapting to different business models when it comes to this stuff. And yeah, COVID-19 has taught us we cannot rely on one stream of income. You need at least 3 nowadays. At least minimum 3. At least 3 income streams. It could be in the same business, but it can't just be cutting hair. It can't just be doing hair. It can't just be baking cakes. It can't just be doing taxes. It got to be multiple streams. In the Badu Enterprises, we have about 27 streams of income. Right? We don't rely on one stream. If one turns down, our car rental business, let me be fully transparent, our car rental business income has pretty much been turned down tremendously. We've dropped about 90% in revenue, at least on the luxury car rental side. On the Uber and Lyft, yeah, we still got some revenue coming in, but it's not as much because the Uber and Lyft business is also down. Our tax business has exploded because more people need tax services in order to get PPP, Paycheck Protection Program, EIDL, Economic Injury Disaster Loan Program. You need balance sheet, profit and loss, so people are coming to us for these services. And of course, we're in our busiest time of the year, which is tax season. To add cherry on top, we do everything virtually, so we're not shut down, right? We're still operating. The guy next door who's all brick and mortar, he's shut down and he's forced to go out of business or even retire. God forbid he's passed away because he's come into contact with somebody that had the COVID because he was forced to shake their hand, right? Not wishing anything upon anybody, but we got to make sure we are adapting. And I know it's not always feasible for everybody, but there are certain things we can do to get ahead when it comes to life, right? There's so many things we can do. Remember, BlackBerry can change their business model, so can you. So we got to have multiple streams of income. To become a millionaire today, you need at least 7, right? At least 7. The Badu Enterprises brand, just to give you guys a secret, will be generating 30 more income streams over the next 3 months. How do we do that? We're accumulating rental properties. So as you can see, you need to make sure you're generating income on a massive scale. So when I look at my budget, I'm worried about more so how do I boost my income? I'm not worried about dropping expenses, right? If I want to drive that nice car, or if I want that nice house or whatever it is, I'm not more so looking to cut on that, right? If that's my dream, if that's my vision, if that's part of my vision board, why not set a plan to attain that dream as opposed to a plan that cuts that dream? And I know, remember, it's not always feasible, but we have to learn how to generate revenue. So for me, my top line, my revenue is my most important number. That's the most important thing that I'm paying attention to. The expense, yeah, I'll cut expenses that I don't need, you know, and then if I can turn something into a revenue generator, for example, one of our luxury cars, it used to be my own personal car, but now it's actually a rental car, meaning that I rent it to other people so that I can generate revenue. So why not enjoy it? Why not get the best of both worlds? You enjoy the asset, the car, and then you also enjoy, you also enjoy the revenue stream or the income stream that comes in. So you need to make sure that you're generating multiple streams of income. It's very important. I know today we're here to talk about the business cohort and working on your business plan, but you need to make sure you're generating multiple streams of income. It is extremely important. So ultimately you can compare your budget against your goals. So this is how you set goals, and I challenge you guys to set goals every single year. Set benchmarks. Set them realistically, but also set a stretch goal. What happens when you set a stretch goal is you tend to push harder. And if worst case, you're in the in-between of your stretch goal and your original goal. So for me, I always set a stretch goal just to push me even harder. And you can have multiple budgets, and always compare your budget to your actual. So every single month, I look at what actually happened compared to the budget, and I just analyze a few things. Hey, why is advertising higher this month? Oh, maybe it's because it's tax season. Why did revenue go down this month? Oh, maybe it's because of COVID-19. Whatever it is, you got to be very, very on top of this stuff. You really, really have to pay attention to this. 9 out of 10 small businesses fail within the first 5 years. And that's in the good year, right? That's in the good times. In the bad times, man, you really, really, really have to be on top of this stuff if you want to thrive as a business owner. Not just surviving or just making it, quote unquote, but thriving as a business owner. And I know we're not always interested in this stuff, but man, when it comes to money and when it comes to abundance and all that, I would be interested. I'm not an attorney, but I'm interested in legal topics because I'm interested in protecting my assets. You'll probably hear me talk time and time again about asset protection. Some people think I'm an attorney because I'm so into the asset protection topics because I don't want to lose anything. I'm trying to be O.J. Simpson bulletproof asset protector. To the actual results. Exactly. So whatever happened in a given month, always compare the budget to what actually happened. And that's more on your monthly. So your monthly, you would compare your monthly budget on a monthly basis, and then you would compare your annual budget on an annual basis. And then also, your budget should be part of your business plan. If you're looking to pitch to investors, and I know with you guys, since you're part of the cohort, you will be forced to do a pitch. So you got to have at least a 1 to 3 year budget in there. So at a minimum, 1 year budget, and then 3 years. I try not go past any more than 3 years, because we don't know what's going to happen. I mean, 3 years you can reasonably predict what's going to happen, but 5 years is way too far out there. In 1 year, you definitely should have something like that. And key is always continuously update the budget on a very, very continuous basis, based off different factors and things of that nature. So always monitor your budget. So at this time, do we have any questions that's outside of the chat box or anything like that? I will get to the chat box questions at the end, and I know that will probably generate more questions. But you guys can feel free to unmute yourself, ask any questions that's not in the chat. If not, then we'll go through specific components of the budget. All right, doesn't sound like we have any questions. So let's go to the actual budget. So in a budget, at the top you have revenue. So that's product revenue, investment income, sale of services, things of that nature. So money coming in, real simple. Revenue is usually one line on your profit and loss statement. So it's revenue, the amount of money that is expected to come in. Then you have expenses. Expenses include fixed and then variable expenses. Fixed expenses are things that don't change over time. So rent, salaries, insurance, things of that nature. Things that are reasonably fixed over a 1 year period. So these are fixed costs. So if you know how much it takes to lease a plant or a building, then put that into your budget. Things that might change, variable expenses, are utilities, commissions, advertising, things of that nature. The way to put it is a fixed cost does not change when you make more money. Right? So if you make $1 more with that cost, it doesn't change. A variable cost usually increases your revenue. So the more advertising you spend, the higher your revenue should be. So the chart looks a little like this. It goes up like that on variable. On a fixed, it goes like this. It's a flat line, meaning it doesn't change over time. Whether you bake 20 cookies or 10 cookies, it's the same, basically. Now, in order to figure out your net income or your net profit, it's simply revenue minus expenses. So remember, revenue is money coming in, and then expenses, money going out. The difference between that money going in, money coming in minus money going out equals net income, or your profit, they should say. So this is just an example of a budget. Let's just do, it's a pretty old budget, excuse me for this. But I think it's a great way just to demonstrate some of the items on a budget. So for this is the Toronto Transit Commission. It is a governmental agency. So for their revenue, they have passenger revenues, outside city services, advertising, rent revenue, things of that nature, commuter parking. So it's a transit company. So anytime you park on their premises, they charge you for parking. So all of those things are revenue. Revenue is money that's coming in. What's putting food on your table? And then you have their expenses. Expenses, they have office, engineers, executive branch, the gas that goes into the vehicles or the buses, traction power that goes into the trains, utilities, depreciation, which is pretty complicated to explain. I won't get too detailed into the nitty-gritty of depreciation. But basically, when you buy an asset such as a car, you can depreciate the cost. You can write off, quote-unquote, the cost over time, even though it's not an expense that you truly, you either paid for it or you financed it. So it is in reality a cost, but we just have to, quote-unquote, depreciate it. It's just an accounting term over time. And then taxes and licenses. Not sure how our government pays taxes, but hey, And then the infamous, Yeah, they usually have like other expense or unspecified budget reduction, whatever that means. And then other income. You always usually have one of these on there. So revenues minus expenses equals profit. In this case, it's their net, whether it's an overage or shortfall. This is how, in your budget, it will look like revenue minus expenses equals profit, essentially. Now, how do you actually develop a budget? Remember, we said we would keep this one short, and then we will also do a really, really quick 5-minute segment on COVID-19 updates, things you guys can take advantage of now or later as a business owner. When I say later, I mean a month from now. Yes, sir. Not in front of me, no. But basically, yep. Yeah, so on your revenue, as a restaurant, your revenue would be the sale of what you're selling, your food, basically. So you would have product income. So in your revenue, it would be product revenue or product income. You may also have things like, let's say you're selling any like liquids, for example, or any beverages. So beverage revenue. You can put all that. So I do recommend you guys segment your revenue so that you know exactly what's bringing in what. So you would have food income, right? You'd have beverage income, and then you have any other source of income. Perhaps you do some nightclub, or you do some you do some events, so you can have event income and things of that nature. So that's your revenue. Expenses, you definitely will be paying rent unless you own the place. Most restaurants don't tend to own their own place. Utilities. You will have payroll. Payroll is about 50% or so of a restaurant's budget typically. Insurance. You definitely need some insurance. You need licenses. So you need liquor license. You need food license, things of that nature. Let's see, what else? Yeah, restaurants usually have a lot of expenses. Let me see, what else? Yeah, you cost of goods sold. That's a big one. So as a restaurant, I would expect you have cost of goods sold into what you're making. So, for example, a chicken franchise may have chicken. Chicken will be one of the big cost of goods sold item there. You would have some, any sort of flour. Anything that goes into making the product is usually into cost of goods sold. The food you're purchasing goes on the cost of goods sold. Yeah, cost of goods sold is your expense. As a restaurant, your biggest expense will be cost of goods sold. Correct. Cost of goods sold meaning you bought something and then you sold it. So you bought chicken, and when you sold that chicken, it turns into a cost of goods sold item, basically. You bought chicken for $5, right? You sold the piece of chicken to somebody for $10. Your cost for that chicken is $5, basically. Yeah, cost of goods sold is an expense. Exactly. Mm-hmm. Yeah, no, you're good. I think it's a great question because as a service business, you will not have cost of goods sold. If you sell a product business has cost of goods sold. Cost of goods sold, remember, is an expense. But as a cleaning service, your number one income is cleaning income, right? So your revenue at the top line, cleaning income. And your expenses, you may have some supplies, right? You may pay somebody to do the cleaning. You may do some advertising. I would expect to see some advertising. Let's see what else. Anything that you're spending money on goes into the expense section. So yeah, the difference between you and a restaurant is just a restaurant has cost of goods sold, which basically the cost of goods sold item itself is the chicken purchase, right? So the purchase of the chicken is an expense. It's a cost of goods sold. It's just classified under a different category than you, for example, who has supplies where you're using it to clean other people's stuff, pretty much. Exactly. Exactly. Yeah, so products, anytime you have a product-based business, you should have cost of goods sold in your expenses. I would expect that to be exactly. Yeah, so it would go a little something like this. Income minus cost of goods sold equals gross profit. And then anything after gross profit, then you list your other expenses. So rent, utilities, salaries, insurance, all that good stuff. Income minus cost of goods sold equals gross profit. This is for product-based businesses because you're selling a product. And then basically everything else after that, it would be in your expense, like other expenses, basically, other expense category. Exactly. Yep. Anyone else have any questions before we go into how to actually, generate the budget? Yep. Mm-hmm. Yeah, so that's where we went over that last time, where you have to come up with the price, and then you have to determine how much revenue do you want to make. So in a nutshell, it's not really a number that exists. It's a number that you're coming up with based off your best judgment, based off how many clients you think you can get, times the price you're selling the product. That's how you get your revenue number. Exactly. So it's not like a number you'll find on Google or anything. I mean, you could use averages. Maybe the average startup in your industry generates $50,000 in revenue. You can do that as a benchmark. But I would say come up with the price, come up with the number of customers you want. Price times number of customers equals revenue. Mm-hmm. I'm sorry? Exactly. Exactly. It is a best guess, best judgment of how much your business is going to do based off what you know. So when it comes to a budget, it's about coming up with the best estimate possible. It won't be exact. It won't be... it's very rare that a revenue number on a budget is actually spot on, especially in year one. So usually you just have to make sure that usually you just have to make sure that you're using your best judgment possible when it comes to that. And doing like research on your market and seeing what your market share is, how many potential customers you can get, and then just saying, you know what, this year I want to make $100,000 in revenue. Then you put that in your budget. It's okay to be off. At least you set a benchmark. The key is you're choosing a number that you're targeting, that you want to hit or you want to reach. So that's when it comes to that. So yeah, really quickly, let's talk about QuickBooks. And we will, full disclosure, next time we chat next Monday, we will go through a demonstration of some of the tools and techniques of QuickBooks. But a tool you can utilize is QuickBooks in order to create the budget. Basically with QuickBooks, they have a budgeting tool where you can put in some inputs, and then it can produce a budget for you, essentially. So you would sign up, and you can't do this in the self-employed version or the simple start. You do need the more advanced version of QuickBooks. And you basically put in the inputs. Hey, if you're like, you know what, I don't want to use QuickBooks to start with, then you can do an Excel spreadsheet that lists out the revenue at the top and then all your expenses later on or below it. And then revenue minus expenses equals your net profit, ultimately. And I do recommend you attend a QuickBooks training. We do offer trainings on QuickBooks, but we will go through a demonstration on QuickBooks, and then we'll go through the different tabs and just play around with it a little bit, just so you guys can see what I'm actually talking about. Today was more so focused on the budget items and a tool you can look into to get QuickBooks, but as far as like actually using it, we have another segment called accounting software next week, where we will go through the various accounting softwares and show you how to do some of this stuff in there. Or you can also do this in Excel, but I challenge you to automate the process. Remember, COVID-19 has taught us a few things, and one of them is automation. Learn how to automate the process, learn how to automate things. But really quickly, a few things that have happened with COVID-19. For one, there are stimulus checks that are coming. If you filed a 2018 tax return, at least, there's about a $1,200 stimulus check that is either deposited or should be on its way. About $1,200 or so. A married filing jointly couple is $2,400. And also, they have talked about a stimulus of $2,000 per month that could be coming your way pretty soon. So that could be good news. For a business owner specifically, there are 2 loans you can apply for. There's the PPP, Paycheck Protection Program, which requires, if you have a corporation, that you have payroll. So you do need to run payroll. And remember, as an S corporation, you should be running payroll anyway. But if you have a sole proprietorship or you're self-employed and you don't have an entity, then they'll use the average profit. So average profit of the past 12 months to determine how much you qualify for as far as the amount is concerned. And yeah, it's pretty much a fully forgivable loan as long as you use the money for payroll, up to 75%. They also have the EIDL, Economic Injury Disaster Loan Program. It's about a $10,000 advance for those that have been negatively impacted by COVID-19. So you can go on the SBA.gov website to apply for that. They did run out of funds last week. Literally, the money was there for 2 weeks. $350 billion was gone in 2 weeks. Some banks are undergoing lawsuits right now because some customers felt they were mistreated in the application selection. But they did release another about 300 or so, give or take, $1 billion for the fund, which should be going out between today and tomorrow. So if you have not applied, here's my advice today. Go on the SBA.gov website. If the link is open, please apply. And if you haven't applied for the PPP, Paycheck Protection Program yet, please do so and apply. You can apply through your bank, or you can use a site like Lendio, Lendio. Once again, Lendio, Lendio. Very great site to apply for these programs. This is free government money, so I don't see why anybody shouldn't be taking advantage of this. So with that being said, that's the material, that's the content component. Definitely appreciate you guys for listening. Let me just read a few of the questions that were on here really quick before we get into the more Q&A. And I did promise we'll be done with the content by 7 o'clock, by the way. And we're at 7 o'clock right now. But what is the report? Shikara asks, what is the report you're speaking of? Did I hear you say that? You'll be sending it to us. It's called IBISWorld Report. So to get a report, you physically have to email me and request the industry that you're looking for. And I'll put my email in here just so you guys have it. It's jb@badutaxservices.com, but I'll put it in the chat box. Yeah, IBIS World. That is correct. Yep. Yeah, if you go on the website right now, they will charge you money. But if you email me, I will be able to send it to you for free if your industry is in there. And then, yeah, no problem. And then we have a question from Ladina. She said, can you put together a chart for your ROI example if possible? If so, okay. So let me just demonstrate really quick. So ROI, first of all, I'm writing this stuff in the chat box for those who are following along. ROI is simply profit, right, divided by expense. So it's the profit of something you made divided by the expense. And to avoid any confusion, I'll just call it expense. And I just put expense equals investment. Basically, I don't consider stuff an expense. I don't ever say something is a cost to me. I say something is an investment. It's something I'm putting money into to make something out of it. So I don't consider a cost an expense. On my books, expenses don't exist. They're called investments. Formally, accounting-wise, they are called an expense, but it's just a way of thinking. It's a retool of your brain to stop seeing things as like a burden, like a cost, like, oh, I don't want to pay money for this. But if it's going to generate you money, then you probably should, because it's going to make you more money. That's what I call an investment. So return on investment. I'm sorry? ROI stands for return on investment. Yep, so return on investment. And then in my example, I said 50 new customers per month generated times $150 price per customer. And that equals $7,500, aka my profit. I'm sorry, that's my revenue, I should say. That is my revenue from that specific item. So then to get profit, so I'll just put in here, the expense equals $500. Profit equals 7,500 minus 500, which equals $7,000. That's my profit. So to get my return on investment, it's simply, to get my return on investment, it is simply $7,000 divided by $500, which equals 14. And if I want to put that into percentages, 14 times 100% equals 1,400%. Hopefully that answers that question. Let's see. All right. And then we do have a few more questions. So we're actually doing a quick live stream here too. It says, for a first-time business owner, at what point stage of ownership would you start investing in other streams of income outside of your first business? I would say I would do it probably at, within a year. So I would say after a year or so of getting used to your business, getting used to the flow of everything, getting your structures in place. After a year, I think you should be comfortable enough to look into another revenue stream for that business. And then, yeah, there's an IBIS world for any industry in the world, by the way. So any industry you can imagine, there is an IBIS world report for that too. Yes. Short answer. Yes. Yes. If you have the means to do so, if you're willing and able to learn, first and foremost, how to invest in real estate, it does take time. It took me about 50 hours or so of learning just to start actually holding my first piece of property. Now, it doesn't have to, as an investor, exactly. It doesn't have to take you that long. But me, I'm the type that I like to do my research. I like to take my time and know something before I get myself involved in it. Now, that doesn't mean I can't test out certain things. I can't do wholesale or shadow people or put in offers and things of that nature. But to actually get the property, it took me a while of research to get it done. I mean, it is good. I would say overall you need at least between $5,000 to $10,000 before you actually invest in your first property. But that's... You said, how do you find who? Mm-hmm. You mean real estate agents? Like a realtor? Oh yeah, and then also always turn on your notifications on Zillow, Trulia, and Redfin. These are real estate websites. And just turn on a notification for what properties you want. One thing I learned about real estate, you have to be extremely proactive. The realtor will do their job, of course, but you have to get ahead of the curve, right? The realtor will find your property, but I found much more success when I've had my notifications on. It sends me the property, I do my research, I run my numbers, then I send it to the realtor and say, hey, let's schedule a showing for this property. Mm-hmm. Yeah, absolutely. So Yeah, you can feel free. But we have a question here. It says, I keep being outbid when every property is requesting highest and best offer. I lost my last dream property by $50K after offering $10K over asking price. Help me later, please. I mean, honestly, it's I personally don't get into bidding wars or anything like that. At the end of the day, if you want a property, please make sure you offer the price of that property. That's how you get the property. Any property that we put an offer for, right, we've already ran our numbers before we get into the deal. Before we even contact the real estate agent, we've already ran our numbers. So we don't care about price when we buy buildings. That's one secret. Price is not a factor. What we care about is how much revenue this income stream is going to generate me. So whether 1,000 or 5,000 in between, no, I'm not worried about that. I'm worried about how much this property can make me over the next 10 years. So me bidding $5,000 initially below, because usually you get in a bidding war when you bid below initially. Like when you initially come into the bid below. And then somebody might say, oh yeah, highest and best. But when you go in and you offer the price, and we don't usually offer higher than, what it's offered at. So if you are in a case where you initially told the real estate agent, you submitted the offer and the price was actually higher than what it was listed for, then it just might not be the right property for you. That's just what it comes down to. But if you initially went into the bid, basically at a lower price, that's where you come into problems. We don't do low bids anymore. We just don't do it. Because we're not worried about saving $5,000 today. We're worried about making $100,000 over the next 5 years, because this is what this property is going to generate us over the next 5 years. That's what we're caring about the most. Price is nothing we look at, really. Price is the very last number. As a matter of fact, we propose our own price at the end, right? So we see a price listed, and if it's good, the numbers work out, yeah, we'll just go with the price that they want. But if our numbers come out and it says, okay, well, it's a great property, but let me just put an offer anyway, at that point is when I would bid at a lower price, when the numbers don't really work. And I'll tell you, if the numbers usually don't work in real estate, we don't make the bid at all. Like, if something looks off, sounds off, feels off, you just step away from the deal. There's tons of properties. The deal of the day comes by every single day. So that's what, real estate is a game you have to play. We've placed 3 bids over the past 3 weeks. Right? We're closing on about 50 units over the next over the next 6 months, and 30 units over the next 2 months. On the 3 properties we placed bids, we haven't lost a single one. We just straight up said, hey, you want your price? Here's your price. Basically, take it or leave it. We're literally offering them what they want. If I'm a seller, I'm going to take that deal. If it's a good buyer, they present it, pre-approval and all that good stuff. So, yeah, real estate is a game that you really have to know how to play it the right way. And we make offers within 24 hours of seeing the property. That's another thing. Sometimes we do it within 5 hours of seeing the property. Just because if it's that good, somebody else probably is looking at it too. So that's another thing. So the speed of your offer does matter as well. That is another advice that I give to my real estate investors. Any other questions, comments? I use Wintrust Bank for my commercial loans. Yeah, they're pretty good. I mean, they are very strict when it comes to certain things, but Wintrust is pretty decent. And a lot of my investors also use Wintrust as well. You mean for like a rental property? Yeah, so Wintrust does do SBA loans for commercial. Oh yeah, no, I didn't do the SBA with like you're probably talking about what, PPP, Paycheck Protection Program? Yeah, that's... Got it. Yeah, no, I think I know what you mean. Yeah, usually Wintrust, you do it directly through them, but then they connect you with somebody at the SBA. Exactly. So yeah, I mean, yeah, so you do have to connect with both of them. Exactly. Exactly. Yeah, it's in the chat box right now. Yeah, what's up, James? Oh, man. Yeah, that's a cool background, James. Man, oh man. Anyone else have any questions, comments, anything? Yes, sir. Are you talking about SBA.gov? Mm-hmm. Yeah, so that's for like the loans, the business loans, and all the programs, SBA programs, government programs that have come out recently. Lendio, yeah, Lendio. All small businesses, yeah. If you have a business and you were active as of 2019, you qualify for one of those loans. Whether or not you'll get it, that's up to them to determine. But I would apply it anyway. Correct. Yes, correct. Yeah, so the EIDL loan has to be applied on the SBA.gov website directly. So, No, so you must have a tax return filed. That's one of the stipulations of these loans. Yeah, so as you can see, here's another thing that the COVID-19 taught us. We must be compliant and we must file our tax returns if we want to qualify for some of these programs. I mean, it's real simple. So first thing is the PPP loan is a first come, first served loan. As long as you have payroll, so these companies tend to have W-2 payroll. As long as you have payroll, you submit your application to a lender. And they were probably one of the first people in line when they found out about the PPP. So it's very, very easy. There are other companies, other Fortune 500 publicly traded companies that are getting these PPP loans because they're the first ones in line. Right? They're the ones that are applying for these things because they get to know about them first. The records are all clean and everything is straight. They submit it and then boom. And they have good relationships with banks usually. Right? So one thing to note, is that everybody on this call today can be in that same position or similar position. I know it might sound way out there, but if you have a business that you're running payroll and your records are straight, you got your tax returns filed, everything is good, everything is clean, and you are using a site like Lendio or you have a good relationship with your bank, then you too qualify for PPP, just like everybody else. So with PPP, you don't need to show that you lost money. You just need to show payroll, or you need to show profit in your business if you're sole proprietor or self-employed. I would say that if you are sole proprietor or self-employed, you do have a harder chance of getting this loan because they only, I believe from what I've heard, they take more seriously the LLCs, the INCs, before they take the sole proprietors and the independent contractors. So yeah, that's how they're. It's not a loophole even. Like it's not even a loophole. It's just simply they applied. They were the first people in line, and they got the loan. You know, same thing with stimulus checks. The folks that filed their tax returns, and they met the requirement, they're the ones that ended up getting the stimulus check. You know, so these are things that we just got to make sure we're doing things the right way now. And remember at the beginning I said, how do we position ourselves to not fall or not get into a COVID-19 trap again? Is we get these things done in advance. We get it done right. We're meeting with an attorney to get our legal affairs, together. We're meeting with an accountant like myself to get your accounting and tax affairs together. And we're just making sure we're doing things the right way. That's what these companies are doing in order to get some of these programs. Mm-hmm. Mm. Mm-hmm. Is it the EIDL or the PPP? Yeah, it might have been the EIDL then, because PPP requires you to have payroll or you have to show a profit. If you're if she's not a corporation, then she qualifies for the PPP if she had a profit in her business and she had a tax return to show that. Right? So if you truly want to compare and contrast, you have to look at both tax returns, right? You have to look at both businesses as individual and separate businesses. You have to look at the records because they do ask for a profit and loss balance sheet and all that good stuff. So at the end of the day, I can't tell you why she might have got it versus you, but I can tell you what they need in order for you to get the loan. So yeah, it could be very well she might not be telling you something. Maybe she didn't run payroll. Maybe she's not putting it in the right terminology. So. Right, exactly. Do you know what bank she used to get it? That could be it. And who do you bank with? Wow, okay. That's interesting. Man, oh man. Man, well I'll tell you, yeah, as your friend said, people are getting it. People are getting the money. I got clients who are getting the money. And by the way, the new money is being released probably tonight or tomorrow. So if you haven't applied, anybody on this call who hasn't applied, man, I would have the SBA site as one of the tabs. I would check it like every hour. Because, oh yeah, you should. But I would probably consult with the consultant first before you apply. Because there might be something in the paperwork that might not be aligned. Mm-hmm. I mean, $100 for $8,000, I think that's a good return on investment. That's a great return on investment. And it's free money too, that's the thing. So if somebody's charged you $100 versus nothing, perhaps she might have used an accountant. I don't know her situation, but she might have used an accountant. Next thing you know, $8,000 lands in her bank account that she's able to use to grow her business. Mm-hmm. So it is free money. It is truly free money. It's first come, first served. We do have a loan consultant on our team that assists all of our clients with the application. So if you need to spend a little bit of money to get the application or to get it going, then you got to do what you got to do. Worst case, that $100 is tax deductible. Mm-hmm. Mm-hmm. Right. So the first thing is, did you file a 2019 tax return? Got it. So that would be the issue right there. Is you have to have a bit, whether it's a Schedule C sole proprietorship tax return that goes on your personal return, you need that in order to submit it to the SBA. Without that, you don't qualify for the loan. Mm-hmm. There you go. There you go. Prime testimony. Mm-hmm. Yes. Yes, you can. You can. But here's the thing. You got to show a profit to get the loan. Most businesses that just started that late, usually don't show a profit. Probably 9 out of 10. Mm-hmm. Yep. And then somebody had a quick question. It says, does Badu Life and Health Solutions provide healthcare plans as well? Yes, we do. We will partner you with somebody if you need health insurance. We do have a very strong relationship with a partner that helps set up health insurance and health plans and, packages and things of that nature. So what we can't do, we have somebody right next to us that can. Any other questions? Last call for questions before we end it. Looks like we'll probably be ending early today. Yeah, for sure. Yeah, no problem. All right, cool. Well, it doesn't sound like we'll have any additional questions. If you guys need me, please, this is the time where we got to stick together. We really, really have to work together, take advantage of these programs. There's more coming out. We don't know when COVID-19 will end. So this is a time for us to take advantage, leverage resources, and adapt our business plans, right? By the time you guys get to your case competition, I challenge you to have some sort of virtualness in the business model because businesses are being forced to go this way. I mean, it could be, there's so much. There's so many things we can do nowadays, but I challenge you guys. Remember, this was recorded, so I'll send it to James, and he'll be able to send it to the rest of the crew. But we'll be back, same place, same time next week. With that being said, I'll stop the recording now. See you guys. Stay safe. Stay home. Don't go outside unless you need to. Yeah, same link. Yep, same link. Yeah, this is my my Zoom link, so you guys can use it. Cool. All right, you guys, hope you take care. Stay safe. Appreciate it, James, for the opportunity. Appreciate you guys for joining. And we'll see you guys.